We have 100 years of compounding innovations governed by the physics of human beings, our banking hours, things being printed, when the batch files are run. These are all predicated on the presence of humans. Protocols are built based on the lack of a presence of a human. So all of the dependencies of the physics of like how money is allowed to move in one area don't apply to the new paradigm. You think about agents coming online and you think about all these other workflows that are going to enable forms of commerce that don't even exist today. They're not going to be compatible with the physics of the previous version.
Season 7 of Stableminded is powered by Brale. With Brale, you can launch stablecoins in just minutes, and most importantly, actually make them usable. They have a single API that unifies licensing, custody, on-ramps, and off-ramps. Brale is the stablecoin issuer for emerging ecosystems like Canton and Lightspark, and they also provide core infra for payments and embedded finance teams like Coinflow, Rain, Flashnet, and hundreds of others. This season is all about stablecoins for everyone. Learn more at brale.xyz. All right, Ben, thanks for joining us. How's it going?
It's going great. You know, what we're spending a lot of time on right now is I think we're past some of the sort of like philosophical forms of adoption for stablecoins, and we're getting into the actual usage, which is great. But the amount of volume that's coming on chain is coming faster at greater volumes, dollars, number of transactions. It's just like a rate that's far accelerated in comparison to anything that we ever imagined. So now that we've kind of got stablecoin issuance out of the way, it's all into what do you do with them and maintaining and scaling the systems that support the actual use of these bespoke stables. And the numbers are just growing. So we're going to need to focus on scalability and usability and all that good stuff. Just building a real business now.
Yeah, it's exciting. I love the vantage point and where Brale sits in the industry because you're at such a foundational level and you see so much. And I'm excited for this podcast and this conversation, I think, to really highlight what that vantage point is. The theme of this season that we're building with you guys is like stablecoins are for everyone. And I think specifically the fact that you guys always say that is so true to who you are as a company, because you are sitting in that a very pivotal place where you are touching everything and you are building a system that, because it's money, infrastructure should be for everyone. And so just really thankful to be doing this with you and excited for this conversation. It'll be good.
Yeah, thanks for having us. I mean, we say it a lot, but we mean it very honestly. When we got started, the opportunity for the company is it's not that stablecoins were a bad idea, and it's not that blockchains are not going to be better than relational databases. It's that they were too expensive and too hard for like the everyday developer or everyday fintech project to make use of. And so our whole goal was initially to bring the barrier down to zero, to basically let everyone launch one of these things. And now we're seeing what they do with them when they launch them, which is great. We're working on the distribution side, not the sort of like enablement of just launching one, which was the initial focus. It's amazing. Like the cost to transact on chain has basically come to like zero. We're there. And the cost to launch a stablecoin has now come to like zero. We're basically there. And oh my gosh, like it's all opportunity from here.
Yeah. Super exciting. For some history, something that I really, before we get into like January, what you're building, what it is, I think dialing back a little bit into, I know a lot of this because I've been grateful to know you now for over a year and kind of been following Brale very closely. But your journey as a builder and as a founder, as a, someone who's built and worked in fintech and payments for, how long has it been, Ben? It's been 2 decades, over 2 decades.
I mean, something like that. That sounds about
right. And I say that in an honorable way. Like personally, I'm saying that in like that's really impressive and really cool, because when I first met you and, being in the founder ecosystem a lot, you see a lot of younger, hungrier people who are doing this for the first time because they see, maybe they grew up in a system where like, they just felt that pain and this is obvious to someone like me who's 27, 28. What I loved about Brale and why I felt like I just stuck to Brale so quickly was that your team came from like the space and place that you're going to now go transform versus entering the picture for the first time. And you can bring that perspective and bring that lens into the conversation. Not to go super deep into Dwolla and that journey, and there's so much there, but maybe just share what about that experience. I think would you say gives you that competitive advantage or insight or passion for this problem that Brale is solving with money?
Well, gosh, Dwolla was such a like magical experience, but so painful. And when you have those types of things happen over a long period of time, certainly it changes who you are, and certainly it changes who you know, and certainly it changes the way that you look at the world. And so when I left Dwolla, I think I don't know if it's getting to be 6 years ago. I wasn't sure if I was like gonna like retire. I didn't really have a plan. I was just trying to do the best I could, help out, so on and so forth. And I think that the biggest thing that we had the opportunity to do when Brale was getting started was think about not like what do I want to build or what do we want to build, but what does the market need? And spend enough time to look at, well, what's sort of like the arc look like in terms of opportunity? And our view was that we're probably at like a century, once in a century type major turnover in like infrastructure for money, because the last sort of wave was sort of initiated by Fedwire, followed by ACH, followed by Swift, so on and so forth. And obviously this is a very Americanized view because we're both Americans, but at the same time, this could play out internationally in different ways where it's probably much more consolidated because emerging markets adopted better infrastructure on the payment side much faster than the US did. But if you kind of just look at blockchains, you could see this trend line where the cost was going to go down below a relational database in terms of speed and cost. And so eventually they were going to become the obvious tool for the job over like rolling a local database or something like that. Cost is a big motivator for the people that are working in those systems. And the other one was simply that stablecoins, digital dollars, CBDCs, like whatever acronym you want to call, like deploying a digital token backed by something else, it's all kind of like the same architecture. So what needs to be put in place to broaden participation or broaden access to those technologies? You need a regulated entity, proprietary technology, and basically all the regulatory approvals that allow you to legally be in that business to see whether or not that thesis is actually true. And so that was kind of like the thing that led us to get started. And it was a bet because it was basically saying we're going to start, and then 2.5 years later, we think this is what was going to happen. And sure, we got really lucky. The core thesis was right, and the timing was right. And gosh, how often in startups like do you actually try to calculate timing and get it right? And like when the universe gives you one, you just take it, man.
Yeah, we're definitely experiencing this, January 2026, this wave, this crest of a wave of what's feeling like it's breaking. And there are a lot of people that are just starting to paddle their boards. And it's really cool to see you guys riding it. Like you're just kind of getting up. Well, I see you guys kind of just now standing up on that surfboard, like kind of, we're in the right place. We've built the right board. Timing was perfect, but we still haven't even really ridden the wave yet. Like volume is starting to go up. Your team is strong, but like the ride is barely starting. One, is that like a picture that you think is accurate, or are you like maybe in a different place? And then what do you think what were some of the things you did in the last couple of years specifically that you are proud of that have resulted in getting you to that point?
We first started selling the product. We said that we don't know what the market's going to do. And when we did the first round, the outcome of that first round is let's find 2 customers to get live. 2. And then when we get 2, we'll have enough information to decide, okay, what do we want to do next? And by the time we came out of that, we launched 200. The company's profitable, and the company had like a dozen employees. So like I'm proud to be one of those people, and I work in the business. For those who work with me, they know like I'm not a manager's manager. I'm in the work. I do the work. I like doing the work. It's a big part of who I am. And I think that taught us a lot about that and what the early bespoke projects needed. And we started working on aligning roadmap against what those projects needed, but we didn't hire up meaningfully. I think today maybe we're around 20, still a small team, still operating in certainly the most healthy manner I've ever observed in a startup before. And the opportunities that are coming in, they're bigger and bigger and bigger. But if you're a Fortune 500 company launching your own stablecoin, believe it or not, you have the same needs as a company that's 2 people that hasn't raised any funding. The follow-on distribution needs and sort of like on-ramps and off-ramps and liquidity and all the stuff that comes with it, it's identical. And so a lot of the things that we focused on for the super small projects that were too small for anybody to be looking at have given us kind of like a unique insight in how to help the bigger projects be successful. And when they come online, those waves are so big, comparatively speaking, that I don't think we have any idea what's that going to do to the market when some of these companies come online. Like their throughput in a day is probably more than some of the leading chains are over the period of a year. Like they're just astronomical in terms of volume. We don't know, but we're excited to find out.
Yeah. So you decided to in this, couple year period of going from 2 to 200, you have decided what I think is personally my own view of what I think was the most interesting and strategically one of the things you got right from like a go-to-market positioning standpoint is that you built the infra, but you didn't brand the infra as like a leading part of who you were, meaning like you really stuck with issuance and money and dollars, and that was the business, and that wasn't something that was super hot or like common to do back when you started. In the last couple of years, I feel like has been an infrastructure race in many ways. Like a lot of the big acquisitions, a lot of the fundraisers and companies who are like getting the spotlight have been building the infrastructure piece that is needed to implement the clients that you've been getting going. But for you, you've kind of gone one step back into the money layer, and then thought, like, from my understanding with Brale, maybe you can speak to some of these things you've built. A lot of the infrastructure you've created along the way, which is now like performant enough to be what a standalone infrastructure company in some ways is marketing themselves as. Like maybe speak a little bit to that strategy or dynamic that you now have to go bring money infrastructure to companies.
We are very fortunate that we've always had excellent people on the team. And I think one of the insights very early on was, well, if we can't sell the product for 2.5 years because we don't have the licenses yet, we have to wait until we get the licenses to sell the product because we're selling a regulated product. And part of our view is that the concept of like rent-a-charters and things like that are not like sustainable long-term, so don't do them. We just, over the last 15 years previously, had seen too many projects go sideways on that reliance. So there was a lot of dialogue about, well, what do we do to give us optionality? And when we looked at the different market opportunities, we looked at vendors all over for like MPC infrastructure, custody, so on and so forth. And there were two things we could never get comfortable with. The first is that if you notice, Brale's business is like very ecosystem driven first and foremost. Like if you look at the company, we integrate with new ecosystems as like a first principle of the business. So, Canton, Radius, all of these, or Stellar or Solana, they're all really important partners for us. But distribution inside of those technologies and ecosystems is very important. So every time we had to call somebody else and say, can we add a new ecosystem? That for us was just like, what? Why can't we do it ourselves? Everybody required us to sort of like call dad and ask for permission, which like for any parents out there, your kids don't really want to ask, but they sometimes have to. But as an adult, like you don't really want to go ask permission to go realize an opportunity for you professionally. And the other thing was that a number of the providers we were talking to had this like AUM model where they were very focused on charging for custody on an AUM basis. And if you've ever worked in sort of like real clearing and infrastructure systems, adding a basis point charge on something is literally an Achilles heel. It means that you are reducing the number of applications your software can be used for by like not some percentage, but like orders of magnitude more workflows than you're actually going to be able to serve. And so the only way we could figure out how to get around that was sort of like roll our own with really specific partners that gave us the optionality and meant we didn't have to roll through that basis points cost to our customers, which now that we're live has turned out to be a pretty big advantage, because in the market, we're finding out people are charging like 25 basis points, 100 basis points to like process a wire transfer to a stablecoin. And we're over here just saying like, no, it's zero. And it's not zero because there's a trick. It's because we built our own infrastructure. We built our own regulatory model. We built our own correspondent network. And we think those are the great enablers to actually get stablecoins to everybody.
Yeah. Yeah. Really, stablecoins transform the payment processing industry completely on its head because of that. There's so many industries that stablecoins will flip over. There's trillions and trillions of dollars like in that industry of just simply moving value back and forth and the intermediaries that live in between. It's going to be like, you're so right. If you have an AUM model, that paradigm doesn't really need to exist anymore. And that's such a huge pie to start bringing value and incentives to convert adoption. Like, maybe what is that like now as you have this infrastructure, you're able to, and just to be clear for those who are getting to know Brale for the first time, Brale makes money by helping companies, ecosystems, organizations of all kinds build stablecoins, create them, provide the infrastructure around them, and then is the primary way you're monetizing, taking some of that AUM or growth and sharing in that upside with that builder. Is that essentially how you describe it?
Yes, we've thankfully found a number of different revenue streams. And if you sort of like, obviously we're very small, but if you thought about it from a mental model perspective, you could think about it like if you look at Coinbase's revenue reports inside of their public filings, you have reserve revenues that are driven by stablecoins. We help our clients deploy stablecoins. And so, yes, we share in the reserves and in the reserve revenue with our clients, which means our clients, when they're launching their own stablecoins, they're introducing a revenue stream to their business. We're not a payments company, but we work with a ton of payments companies to introduce new revenue. And what's so powerful is many times they're used to spending money on payments infrastructure. Imagine adopting payments infrastructure that makes you money. Once that clicks, it's like, oh my God, it's faster, it's cheaper, and we make money on it, not it costs us money. That for payments companies is like the great unlock. And so one of the things we also do is we do charge for fiat transactions, and we do charge back for gas fees. And so when you use our platform, you don't post gas fees into it, largely because a lot of the blockchains that you're using, Drew, would be really hard for people to go like source the native token in order to pay the gas fees. So we prepay all of it with a gas station, and we charge you back like a Web1 company at the end of the month. So those are our variable revenues. We also operate network infrastructure. So we operate validators and nodes on different networks to help bootstrap these networks when they're early. That's a business that we didn't expect, but we really love. If you look at blockchain rewards and like Coinbase's earnings, that's something that's very similar. And then we charge feature fees. Some of our clients pay us, X dollars a month for things like, if you want to do branding to pay out to basically brand transactions and fiat transactions, we'll charge a SaaS fee for that. If you want to leverage instant treasury, which is basically like a way that you eradicate pre-funding in your business, you'll pay us a fee for that because we're leveraging our balance sheet and a network of sourcing partners for wholesale liquidity to make that funds flow work. And so we charge for places where we create value. We do not tax for sort of like execution of like flipping bits. Our view is if you do that, you hold the market back. But if you charge like TradFi, then you can actually bring things online and allow clients to realize these new revenues.
Can you give an example of a lot? I'm assuming a lot of those things that you just said were created in partnership with that early 200 bucket, like where you realized, oh, they need this. It makes sense to do this. That would really unlock a lot of value, which from just a perspective of building and leading an early startup, I think is really beautiful and awesome. Maybe give an example or two of an early ecosystem, or maybe some of the companies we're speaking to this season where you were working with them maybe on one thing, and then you realized, oh, that's really cool. We should go build that together, and maybe give some examples there that are specific.
Yeah, I think we definitely owe all of our insights to clients or internal problems that we knew we had to solve. And because we had to solve it, maybe it has value for our potential clients.
Would you say wallet custody is one of those examples?
Wallet custody and wallet self-custody has definitely been two sort of like things that have just gotten pushed and pushed and pushed by clients to the point where they're like pulling the products out of the business or pulling the business into partnerships to enable different realities inside of different products. And so I feel like that's very sort of like Q1 for us, Q4 going into Q1, some of those things are coming to be more realistic and sort of going back into the first customer launches. It's like when GLO was our first customer, USDGLO, and I still think is a magical project. But one of the first challenges they had is, okay, we've got a stablecoin. Now, how do the OTC desks and market makers that want to basically help make the market for USDGLO buy? And so that's when our kind of like business product was introduced of just go sign up for it here. We're not going to charge you anything to get in and out of this stablecoin. But to power that, as you know, Drew, you need on-ramps and off-ramps that are B2B friendly, that have no basis points or very large transactions. Somebody wants to buy and sell like $1 million here or there. You need to be able to support that. And so In order to support that, you need to build your own correspondent network. You have to run your own policies, your own risk engines. Like all of these things need to be done. That was a big shift for our business because it meant that issuance had complements and there were revenue streams that came along with it. When we started working on different blockchain integrations, we also maybe a little bit irresponsibly accepted a couple token grants for implementations that were like a split between like tokens and cash. And by and large, almost all of those worked out quite meaningfully in our favor. And then we started looking at what's the network infrastructure look like where we could roll different nodes. And the thing that really galvanized validators for us was that we couldn't participate on the Canton network as a participant without running a validator that would also do other things. So we run multiple validators. We run an application that does so many things, like custody, like issuance, but also has a tokenization engine that is tied to it that was very much driven by demand from these large institutional folks that were saying, we want to deploy digital assets, but we need a mint engine to do that. And so to your earlier comment, it's like you have all this technical infrastructure for deploying assets. What does it look like to do that with design clients that maybe eventually that becomes another business entirely? When we see opportunities to spin a company out, we absolutely do it. We've done it already. We're going to keep doing it. And we think it's a really exciting way to serve the market.
It's amazing. With Canton, since you mentioned them, in from my perspective, that seems like one of the most interesting high upside ecosystems right now that is starting to get legs, starting to get volumes that are significant. Everyone who's kind of behind the scenes and seeing what's going on, whether it's the team at Digital Asset or those working with them, like what do you think about when you actually point back to this is happening, this is working, volumes are going up. It's like, oh, just look at what Canton's doing. That seems to be the thing that gets a ton of people excited. Speak a little bit about to how that relationship maybe came to be, what drew you into that partnership, what that looks like, and maybe speak a little bit to the maybe more emergence of these types of ecosystems. We're talking with Radius and some others, like what the opportunity really looks like for that part of the market, because those are the first two that I'm really familiar with that are starting to be like early ecosystems.
Well, I think it's really exciting because as we know, most of the world's money and most of the world's value and most of the world's assets are not on chain yet. And so most of the opportunity, the lion's share of the opportunity is still way ahead of us as opposed to behind us. And in that way, there's just going to be a number of ecosystems, a number of stablecoins, a number of RWAs. It's like once these things are enabled to be in existence, they will be. And each one, I think, in order to be successful, will have a specific trait. And Canton's trait is good, bad, or otherwise, institutional workflows. They understand it in their DNA. If you go talk to Eric or Yuval or the rest of the team, they know what business they're in. They know what their clients want. Their clients want institutional finality and privacy. These are non-negotiables. And I got to know Eric, I think mostly during COVID. We knew each other long before that because I feel like just shared ecosystems or shared sort of like projects or interests. But I don't know. Did you ever go to Visa, Drew?
No, I have not.
We haven't done it in years. Like Eric did a demo of Daml at Visa. And I feel like did this like interview series for DA, I don't know if it's 5 or 6 years ago. But between all that, he and I'd like to believe became friends. And it was interesting watching Canton and the project go from like a slide deck to, oh, wow, it's actually getting real. And I feel fortunate that I was able to have sort of a front row seat to what he was doing along the way. And also he pulled us along in ways that were quite giving. Like Eric, I think when we figured out how like Canton worked, I'm pretty sure it was Eric flew to Des Moines on the whiteboard, like right where I'm sitting. We spent a half a day and then a full day in Chicago trying to figure out, well, how do these things work together? And eventually I'd like to believe we figured that part out. And then we've been fortunate because that work was so early to be able to participate in things like the Tauk pilot, where it's like when you start using words like DRW or Cumberland or Bank of America in the repo market, the fact that Brale's even included in that conversation, we feel very fortunate. And I think that's given other opportunities to us to work with other ecosystems and kind of to keep going with that sort of like thought of applications. If Radius is successful, think about what happens when folks that came out of like MIT and the Fed build the highest throughput, easy to program blockchain that's ever been imagined before and make it effectively free for everyone on the internet to use. Like, what happens? None of us know. We're going to find out. It's like January something is made net, we're going to find out.
Do you feel like you're working on, like when you describe some of these things in the moment that we're in, is this like, I mean, because you said you were post Dwolla, you were thinking about, do I retire? What do I do? What should I work on? What does it feel like to just be so amped about what you're working on right now? Like thinking back to the moment of maybe even considering not going for this. Like what's that like right now? Thinking back to that moment of evaluation.
I don't know that I've really thought about that much. I'm definitely the type of person that when you know you're going to do something, I don't think about it. I just go do it. And when I'm not doing things, I'm not thinking about that I'm not doing them. It's like once you know, like there's a thing that's locked in, you're just going to go do it. You can't talk yourself out of it. I think for me, it's very much on that side of motivation of I am going to go do this. And when Brale got started, I was also very fortunate that because there was time to think about, okay, well, what's the size and the shape of a next project or what could a next project be? I was really lucky to have a different group of friends that were giving me very blunt, honest feedback that was not in respect of my feelings, but in respect maybe of like how I could spend the next 10, 20, 30 years of my life and what maybe my unique skill set is with the people that I was working on things at the time with. That feedback helped shape a lot of what Brale is. It is an amalgamation of the people that were sort of like helping me ideate and work through the idea at the time. It did not radiate simply from my head. I was a part of the conversation, but it was not just me. And I think the company's much better for it.
Yeah. It seems like a big theme for you personally and the company's success commercially is like surrounding yourself with the right people and being really intentional about who you work with, who you build with, people like Eric who can come into your office and like figure out things in the foxhole. What are the qualities? Because there's a lot of noise and a lot of distraction and a lot of fakeness going on, especially as like the spotlight continues to get bigger and hotter on what we're building here. Like there's a lot of, I don't know what to call it, maybe like insincerity or motives that are questionable. How do you try to evaluate who you build with? What do you look for?
I feel very fortunate at this point in my life and in my career that I genuinely love the people I work with. Like they're awesome. I want to work with them. When I'm in town with certain people, like I want to see like what's new with their family. Like I want to know them I want to keep up with them. I like working with them, but it's not just the team directly, like clients and partners. These are people I generally like and want to spend time with. There are lots of proxies out in the world that I think help filter some of that bad behavior out. But I think we all have to admit some of it still gets through and you just kind of do your best to bounce back quickly and realize that it probably has very little to do with you. It has a lot to do with someone else. And you just need to like let it go and, move on. Plenty of partnerships don't work out. And on both sides, they're still like good people, right? And so sometimes it's also just a bad fit. I think as long as we continue to align ourselves with people that are long-term aligned against this idea that stablecoins are for everyone, it's like we need to think about this as a form of money that should be as broadly distributed as the internet. And if you think about how to charge somebody the most amount of money for a shitty internet connection, as opposed to how to charge them a fair amount of money for the most amount of bandwidth they can possibly make use of, like which one of those things drives innovation and which one attracts more people to build innovations with them? Our view is like, as long as we do that, we'll continue to attract mostly almost always the right people. Sometimes we get it wrong though.
Yeah. But that's a perfect example of like what selling, these are my own opinion, like going back to this earlier point is like, let's go try to make as much money as we can with a wallet API. Let's go try to make as much money as we can with a, on-ramp or off-ramp API or some sort of like thing. That feels to me, yes, that's needed. And you can build a business around that, but you're kind of missing the point of bandwidth and possibility if you're just thinking about a business or full, like holistically just in that specific piece of it. Because then you have to, if that's all you do, you have to maximize profit just for that thing. But I think because Brale has taken the approach you've taken, which is first principles with the money itself, and starting there and growing from there. You've had this really cool ability to really align incentives in that more broad, bigger picture way, which is really beautiful, I think, about how the business is currently working. It's really cool. So with question just for you, last thing on the ecosystems front before we move on. Can you describe a little bit more around what makes a good ecosystem, or in the next few years, what you think that, like, how should we even be thinking about an early ecosystem, and who's in a good position to start one, use Brale to go build one? Are there new types of ecosystems that you think will emerge that we should be ready for? What do you think about that?
Yeah, it seems like the ecosystems that are the most successful, and by successful, I mean both in terms of mind share and usage. Obviously, I have a jaded view because of my view is just the ones that we've worked with and who we've observed closely. But when there's a specific use case that they're focused on, that the technology is really excellent at, it tends to attract developers to build on top of that applications that drive actual network usage. And actual network usage is what obviously drives the other incentives. It's obviously going to work differently on a Bitcoin L2 than a privacy focused L1. You know, like a different era might have said tokenomics, but I think the incentive alignment against the use case is also super important. And if you look at like radius to me seems very obvious because it is independent. The people that are working on it can create a independent perspective of how agents can behave, as opposed to a centralized or central corporate perspective. And there's nothing wrong with that, because we're going to have both like a tempo and a radius and probably other things that we can imagine, where, you know, Stripe likely will be the first user of tempo at scale, where, you know, radius looks at it like a clearinghouse and like a technology, not as a, like, you know, other thing. No shade to anybody. I think both will be successful in similar ideas, but for different reasons. But if you've ever thought about like agentic throughput, if you want to light up that amount of throughput on a blockchain, there are so many blockchains and ecosystems that it would literally knock the network over if that volume came live. Folks don't want to like act like that's true, but we see plenty of throughput challenges based on various applications, and specific technology for that application seems like a no-brainer. You know, Canton is another one. Who knows why they have been successful on the institutional side, where we've seen institutional project after institutional project sort of fall over in the distribution challenge of how do we get everyone to agree and have the incentive aligned. Somehow Canton got that right. Know why, but I'm going to give him credit for it. And then once you get enough of them together, and InfoSec teams and corporate BD teams and the technology leaders align to different product initiatives that you're going to deliver, rolling out RWAs, like there's just a gravity to, it's now easier to implement the technology than it is to try and go sell against this thing. I think it's going to play out in different industries. Like what's going to happen with insurance? I don't know. There are so many different markets that we just haven't even thought about yet.
Who do you think's in the best position to go build and drive ecosystems forward, in your opinion? Because it seems like there's kind of a variety of flavors they can take. You know, something like Solana is very different than Canton and how that works. And I would love to just spend this year maybe just going into it, thinking more around this ecosystem thing, maybe why I'm drilling into this a bit, because it seems like the perspective of how you can see opportunity for an ecosystem is really new, and kind of, we have everything we need now, or most of what we need, enough of what we need to go build them and launch them and serve them, to really know what makes a good ecosystem and who's specifically in the position of distribution, relationship to go build one is really interesting. Digital asset is like a really beautiful profile of like maybe one of many, you know?
Yeah, I think you're right. Something that we did not understand early on is that we were thinking, oh, it's hard for fintechs. It's hard for, you know, this profile of company to launch their own stablecoin. And while that is true, while that's come down, what we didn't also realize is that one of the killer features for ecosystems, for new blockchains, is having a regulated stablecoin as a part of the flywheel for, you know, early partnerships, early app builders, early X, Y, and Z, and also having cross-chain interoperability, which Brale also has, that we built in at the time. We didn't realize having our own mint burn mechanisms across all of these chains would mean we could become a preferred sort of on-ramp and off-ramp from any other chain we support. So you can take $1 billion on mainnet and get it into $1 billion on Canton, and like as long as the confirmations take to complete at basically no cost. Thought philosophically that was cool, but didn't really realize what the value would be as we added n number of different ecosystems and added workflows. So I think that has been great for the ecosystems to come in and work with us because it allows them to test, but also because we believe truly that these things are for everyone. We want Circle to come along right after us. Like Circle just launched X Reserve on Canton, which is great. We've been there for a long time, but we think that's super exciting. And then we're hopeful that they're going to launch like true native non-wrapped USDC much sooner. But eventually then Tether is going to come too. And that's great because really high volume emerging ecosystems are very vibrant, have many providers. And our hope is that we play the same role in acceleration for the ecosystems we integrate with that we do for the fintechs that we integrate with that are just trying to inject stablecoins into their workflow.
Yeah. When you think about the go-to-market this year and the focus, Brale can do so much. Like you've built so much. What would you say are maybe a two-part question here? Who are the companies that might be taking a similar approach to Brale? Because I think what I don't appreciate is this like stablecoin issuance bucket or white label stablecoins bucket, and it's like so broad stroke that it's really hard to know like who's actually able to deliver on a lot of this stuff. What are some companies that you respect or kind of like building in this way or think the same way that you may not be what the market is talking about or people like me are following, but you're like, oh, they kind of see the world like us? And yeah, going into 2026, how are you guys thinking about keeping your heads down and winning that race?
Winning in stablecoin land is an interesting paradox to think about because there are so many big outcomes that I don't know how to balance sort of like one opportunity against the next. So I tend to bias towards what's in our inbox and what our existing clients ask for in order to accelerate them. And then what can we learn to accelerate the next customer that looks like them? And so my sense is that when we were really trying to get started and figure out, well, how can we make these stablecoin things fit together? Two of the companies that we really loved, one was Coinflow, one was Rain. And I remember having a conversation with, I think I probably talked to 20 different investors about both companies because there just wasn't a lot of like stablecoin issuers that were closely looking at it. And I remember thinking and talking to people about Coinflow saying, look, you don't understand. You're a very nice person, but if you can take settlement and eradicate it at the same price from 3 to 4 days on a merchant settlement to 30 seconds, and you can make that workflow something that can be adopted by e-commerce, you're cracking open a revenue stream that the biggest challenge is going to become the ability for the payments company to actually balance their balance sheet because their payment volume is going to outstrip their balance sheet. And so like we actually worked with Coinflow on building products like Instant Treasury, which would be protective of their balance sheet with their own stablecoin connected to their existing payment flows for their customers that maintained, like the same workflow. It's been challenging at times and we've learned a lot, but like that was one of those that was kind of like, hey, we think this is really delightful and incredible. And on the Rain side, I remember talking to folks like, yes, they do have a different issuance stack. And yes, they do have a different way of approaching things with smart contracts. But if that scales, the carry cost of that and the diversity of what is possible is so far in excess of some of the previous systems. And here are examples. And I think that differentiation some folks saw as a risk early on. But also, if you think about Rain, we've got 3 or 4 different projects running with Rain right now. We love working with them on different stablecoin projects. Like many of our customers, we refer them to Rain first. And then, both of those started, Drew, probably 2+ years ago. And we are excited over this next year to start thinking about, well, how do we take those solutions to more customers faster and recognize other early stage companies that maybe we can grow in that way with them. We're not trying to like increase the size of our ARR contracts. We are trying to increase the acceleration of the number of similar companies to Coinflow and Rain so that we can like help them accelerate and be a part of their success.
Yeah. You've picked 2 really, really good winners there early as well. Companies that are also just getting up on their surfboards in cool ways. I love both of those companies. I think Dan and the relationship I saw with Coinflow was the first, maybe how we met. Because I think for me, I also, when I learned about Coinflow, I was like, coming from a background in merchant payments, like, oh my gosh, this is so beautiful. Like, how are they doing this? And then I was like asking Dan all these questions. Like, oh, you should just go meet Ben and talk to learn more about what they're building. And for me, I think that connection of seeing what Coinflow unlocked was the thing for me that unlocked stablecoins. And this whole thing that we've been building was like because of companies like Coinflow, where you really begin to realize like, oh, there is so much more that meets the eye here. And then Brale for me was like a really helpful fabric to think through this industry in that way. So do you feel like with Coinflow, Rain, you mentioned like these specific companies that you almost bet on where you realize that there are problems that are being solved that they're going after that maybe others aren't seeing? Are there maybe not specific companies right now, but specific problems that exist today in your mind that maybe existed like 2 years ago with Rain or Coinflow, like similar types of things that you think need to be built or are similar opportunities in the market that early builders or founders should be thinking through that you'd love to go partner with?
Yeah, I think the Coinflow team is just like tops across the board. It's like A+ across the board. And their workflow is what every payments company in the United States should be implementing. Every single company that is doing payments in the United States should go study that company and look at its workflow and how to reduce costs and increase revenues. And if every company in the United States did that, that's in payments, the likelihood that they come out of it reducing their costs and increase their revenue is very high. Now that's interesting because that means it's going to segment between who's curious and who's not, who's capable and who's not. Like there's still separation beyond just understanding, but once you see it, you can't unsee it. And now that it's there, the ones that adopt it to decrease costs and increase revenue fastest and are successful distributing it are going to build healthier companies, which you and I both know the market is going to reward. And so I think that's great. We want to go help every payments company in America get access to those economics, whether or not it's a 2-person shop who is just doing their first YC application, trying to build their first product, or if it's a Fortune 500 company who's implementing that same workflow. Like we want to be in both those conversations and help. I also think on the Rain side that when infrastructure companies and card issuers look at Rain's infrastructure, they're going to be like, whoa, how do they do that? That's incredible. They should understand it because it's real, or they should just go buy from Rain, which I think many of them are going to actually do because it's very hard. But like we now understand the workflow, so let's focus on the distribution of helping stablecoins actually get to everyone now that we understand them. And, you know, there's probably 10,000 more payments companies in America for us to try to focus on. I don't know how many embedded finance companies for us to think about focusing on. And we really need to build out the sales team and the funnel and all that good stuff now to operationalize that opportunity. It's time.
Yeah. Where do companies go? I think we sit in this for our business. We sit in this layer of curiosity. And this is the vision for really what we think we're doing here as a part of this ecosystem's growth is we sit in the curiosity middle ground as a business, where really that's who we try to focus on serving most is the companies who are who you're talking about that become in the camp of curiosity, where it's like, hey, if we don't start getting curious about this, we're gonna lose. That is the person that we want to serve at Stable Dash, or the professional within those companies. What do you think we need to be doing more of to serve that person at that company? You guys are crushing those demo days and day zeros. Like, highly recommend anyone listening to this to go check that out. Behind the scenes, what's getting built, demos from companies like Coinflow, Parena. You guys have been doing really great work there. Like, what else do we need to do that we're not doing to help curiosity thrive here?
There is not a lot of great professional information around executive education. I think Tempo, some of their blogs early on, have actually done a nice job of sort of like setting that tone for more of a like, well, what's the story that you want an executive to have inside of a big business and what are their key talking points? Because their power in their organization is from the room that they're in and who can hear them share an opinion. And so they want a few talking points that are right in order to help the organization be successful. I think if you go to, you know, like Brale's website, that's the wrong audience. Like there's no like quick one pager for like, hey, this is the take back. It seems like some of those more executive talking points and one pagers and the roll-up opportunities and the roll-up accelerations are the types of things that are a great opportunity. And right now, they're probably organizations that can make use of that are probably paying some analysts a lot of money to give them back those insights, where if they just search their favorite LLM for it and get it back, they'll probably just show that to their analyst firm.
Yeah, it was interesting to see Visa come out with their advisory council. Or do you think we're going to start seeing more of big companies starting to be in that authority, like Visa, to say, like, come to us to learn and we'll kind of guide you along the way?
I think so. I mean, I've never worked in Visa, but I've observed a lot of people at Visa and MasterCard over the years. And I bet there are really smart people in each one of those organizations not thinking about, like, what is the incremental improvement for using a stablecoin or protocol, but how does this actually improve across the entire network of constituents? And the number of constituents they have is so big. And there are so many of them with so many different incentives and so many different wants and needs and promises that have already been made by the network, that imagine the complexity in bringing them along to sort of like self-realize and actualize that by the time everybody's brought along, Visa and MasterCard just has the product to roll out to everybody. But imagine what Coinflow is doing being truly rolled out at Visa scale. If that happens, the way every bank in the world thinks about the movement of money or value will change. Whether or not they want to or not, it will change. And we're in the phase of like, let's talk about it. Let's convene. Let's have the meetings. Let's get feedback. That's like 2011 RTP, right? Whenever the Fed brought together the real-time payments, sort of like working councils and things like that. In any case, I think there's lots of opportunity ahead.
Last question on this. What are the companies categorically that you think, maybe two-sided, have the most opportunity to disrupt and bring new things to market? And maybe the risk of what companies are in the most position of risk if they don't move, if they don't change and get curious, like, and maybe that's the same, maybe that company type is the same in your mind, or just curious how you think about the spectrum of existentialism with this stuff.
You mean more in terms of like incumbents, who's at risk, right?
Yeah, like specific business models or like companies that historically have been really successful, maybe in the payment processing landscape or something. Like, what companies do you see as needing to transform, like adapt or die in a sense?
I think the easiest, most friendly way to look at it is, imagine that an existing
It's not
customer,
a very friendly way to look at it.
Well, I'm trying to make it friendly. Is like,
I know, you're good at that.
Let's imagine you have an existing customer. It's a big customer that's already decided they want to use stablecoins. How would you enable that? Maybe with a partner first. And it's sort of like, that's the first operational question, because the demand coming from people is so high that I would guess in every scaled customer pool of any type, anywhere in the world, in that customer pool, there are people that are exploring stablecoins or playing with them on the weekend, right? It's like, it is the new technology that a lot of these payments people are thinking about and working on. And if you start with, okay, well, how do we partner with this in our business to help our shared customer? That's kind of like problem number one. But if you figure that out, the next logical business case is, gosh, this is making a lot of money. How do we do more of this and bring it more core to our infrastructure as a strategy? You don't have to start with like wholesale change. You can start with this, how do you dip your toe in with a shared customer where demand is already? I think what you're going to find is when you run into the companies where like you have a vendor who refuses to look at stablecoins because like, this is stupid. Protocols are dumb. This is not as efficient. Like, you can hear sort of like the counterpoints are emotional, not factual. The companies that are using those talking points are the ones that like, there's not going to be any gravity or any upside in going to try to convince them. You're going to spend lots of air. And I don't think that's most companies, by the way. I think most companies are responsible organizations that start to look at, how do we service shared customers? And then when that works, how do we bring that closer? There's some aggressive ones will push you out, right? And that's okay.
Push you a little bit on this, like with, maybe my framework is wrong here and you can push me back, but like, I'm wondering what types of companies and business models have historically been needed that with this infrastructure and what's now possible with it, that just core business line is in a position of disruption completely if this works, and if the vendor reliance is no longer needed, because there is no reliance anymore if the company does adopt stablecoins before them. Like, maybe I'm thinking of this in more of a competitive way than I should be, but
I think your framing is fine. I think it's just a slightly different perspective, or like, way of wording it. One thing I think I learned too hard was like find ways to work together as to like find corrections and find like sort of like harsh improvements. And I think the overarching trend is like prior to where we are, we have like 100 years of compounding innovations that are governed by the physics of human beings, our banking hours, things being printed, when the batch files are run. These are all predicated on the presence of humans. Protocols are built based on the lack of a presence of a human. So all of the dependencies of the physics of like how money is allowed to move in one area don't apply to the new paradigm. What we're now thinking about is how these things like overlap together. But as you think about agents coming online and you think about all these other workflows that are going to enable forms of commerce that don't even exist today, they're not going to be compatible with sort of like the physics of the previous version. And so by nature of that, like where are the opportunities? Some companies certainly are going to like have vendor lock-in and have troubles and like all this other stuff. But my general sense is they'll fail because they're bad companies, not because they didn't adapt or adopt protocols. Lots of companies failed over the last 100 years, but the ones that have still been around, I bet they have like a better internet connection than they did 20 years ago. You know, it's like, were they a late bloomer? Were they an early adopter? I don't really know. But I think the good companies will find a way to use the best technologies that are best connected. So eventually, this is where we're all going anyway.
Does it feel still like we're a couple of years away from like a truly starting to taste the agentic opportunity? Like, does that seem like a 2026 thing, or does it maybe feel like agentic commerce and like true protocol-based commerce for the most part is going to happen more like 2+ years from now? You're just starting to smell that opportunity, maybe like you were in the early days of Brale.
I think we're going to have a moment. And I think for stablecoins and like the consumer market, part of that moment was like the Stripe acquisition. And after that, you can see all these companies doing all these things that they were probably thinking about, but that was the impetus for them actually executing them. They either had enough excitement or fear, right? Like that was a moment and that mattered. I do think that the Tauk pilot on Canton, where that real money moving against treasuries in the institutional market, I think that was a moment. I think that was when you started to see a number of people say, oh gosh, it's not Canton specific, but like we should be doing something around this because this matters.
Can you describe quickly what that was for those who didn't see this?
Yeah, imagine institutional players basically accepting treasuries for payment for stablecoin issuance, where the players that are doing that are involved in the repo market. The repo market dwarfs the payments market or the B2B fintech market by orders of magnitude. So in the event that the participants in the repo market that are institutional have very specific desires that are extremely sophisticated in nature, agreed on this is the platform to test this new opportunity. And by the way, it was successful. That is such a moment. That moment is like Waller at a very stable conference saying like, this is why stablecoins are important. If you were standing in that room, it was like you were on a different planet. It was almost impossible to imagine that this could happen. It's the same thing when I feel like the Canton Tauk pilot kind of got off the ground. And I think there's another thing that can happen, which is when one very large company ignites agentic workflows in a way that actually works, that people are using, maybe even without their knowledge, whatever chain that's running on is going to be made, at least for a while, because the flood of people and developers that are thinking about how do I monetize the human eyeballs, or how do I monetize the downline human interest to pay other machines, because there is now an incentive and a technical infrastructure for rewarding that. Like, it's going to be very exciting. I hope we're present. But when that moment happens, like, our mental model is going to change.
It's wild. We have to push pause. I know I'm keeping you way too long. I'm excited to just see this. Yeah, man. Thanks for being on. Excited to see more of this come to fruition. And again, you guys are in this really sweet vantage point of being at the issuer level, but you do so much. And what would be the last invitation, or the kind of stablecoins are for everyone invitation you would have to the market, to developers, to people who are building, that you know, who do you want in your inbox in 2026, I guess?
Everybody. You know, we don't discriminate. If you're a Fortune 500 company and you want to work with somebody who knows how it works, you don't want to be sold. You want a partner who actually helps deploy this stuff. We're here and we want to do it. And we have the team to actually be able to do it. We're regulated. We have sophisticated partners that can scale with you, whether or not it's on the bank side or on the blockchain side. We want to be there. On the other end of the spectrum is people that are kind of like, they're thinking about going through an accelerator. They're thinking about how to actually build a prototype over the weekend using Cursor to build the MVP to see it's even possible and to get their first people on the engineering team hired. You know, it's like both ends of the spectrum want to accelerate their time to value, to reducing costs and introducing new revenues. And, you know, we're here for both. And if you have improvements along the way, just send them. You know, we're nice people. Our only concern is sometimes we get a little bit overwhelmed with what's coming in.
Yeah. Thank you, Ben, for the time and for supporting the season. It's been really fun.
Thanks, Drew. We appreciate the support.